Hello everybody. So today, one of my more problematic stocks finally reported earnings. It took them a long while, but they finally reported their Q4 of 2022, right when just about in 2 weeks we're going to have the first Q1 of 2023 reported by other companies. Anyways, not a problem. They just reported their earnings. And if you look at the numbers for the whole year, they're fine. They're actually pretty darn good. 72% year-over-year growth in revenue. That's nothing to sneeze at. But when you look at quarter over quarter, which is what matters, you can see that from Q3 to Q4 they only grew 6% quarter over quarter. So if you do an annualized run rate on that, that's about a 26%, which is below my threshold of 30% now. So it's the growth has definitely slowed down for Dlocal, and so it's not very good. It's not very good for my type of investing and my standpoint, but we'll see at the end of the video. They gave very nice guidance. The guidance I find very interesting. More importantly, let's look at the gross margin, right? So the gross margin, if you look at it, it's been declining, and it's been declining for a long time. And I'm usually pretty lenient. Like usually if I see like 3 quarters in a row of just 1%, I wouldn't read too much into it. I would read into it as variability. But the problem is when I look at Dlocal is, first of all, it's 5 quarters in a row of declining gross profits that they're showing, declining gross profits margins, right? Not the absolute amount because they're growing revenue so fast, but the margins are steadily declining. And if you go back to 2020, they had 58% gross margin. So when I look at 58% to 47%, that's an 11% drop. That's a pretty big drop. I think you can make a case and you can see a trend in the decline of their gross profit margin, not going in the right direction. To me, this has crossed the line where this is becoming a concern. Are we going to be in the high 30% gross margin, say 2 years from now, year and a half from now? So the gross margin going down is a concern only because it's been so long and it's been trending down for so long. Let me move on. What else can I say? Well, EBITDA. So as you know on this channel, I only care about adjusted EBITDA for the purpose of knowing roughly the cash flow. This company has no debt, and therefore I think it's a decent proxy for cash flow. And what I only care about is that the company is not going to go bankrupt. So they're positive, and for my style of investing, them being positive is good, right? But for Wall Street, they showed a minus 3% quarter over quarter decline this quarter, which is absolutely horrible to do right now with Wall Street. Wall Street has no patience right now. Wall Street is unforgiving when you start showing any decline in the profits. So the market absolutely irrationally hates that profit decline. And that's why the stock dropped about 26 to 27%, depending on the type of the day. Here on Google, it shows 28%, but it's almost a 30% drop essentially in a matter of 1 to 2 days if you account for information leakage in the pre-market. So it's a major drop in 1 day, and that means the market is really upset, and that's despite them giving stunning guidance and outstanding guidance, really showing that this market is short-term. This market wants profits now, and they want them fast, and if you don't deliver them fast, and if you don't grow them, the market will punish you. But I think Dlocal is even more of a special situation because of that short report. So when I invested in the stock, there was no short report on the stock, and you may remember it was one of the early videos I made on the channel. I was pretty excited about Dlocal's future until one of the I'm gonna say one of the most relentless shorts on Wall Street came after Dlocal. And you may remember that day when they released the first short report, because they now have 2 short reports on Dlocal. When they released the first, the stock dropped 50% that day. And I made a video that day. I'll put it into the description. But I vividly remember the founder of Muddy Waters, 15 minutes on CNBC, bashing Dlocal for 50 for 15 minutes, and that's why the stock dropped 50% in one day. And Muddy Waters is fairly well connected, right? Lots of connection to Financial Times, Wall Street Journal, all sorts of journals like that. It's a very well connected short seller. And to me, one of the reasons why this stock has still not recovered is that there is a major overhang on the stock from this short seller. It's a major overhang. And if you've been following the channel, you know that I'm slowly averaging out of Dlocal. I'm slowly saying, I haven't bought since the short report, and I'm slowly saying, but you also know that my style of investing is I do everything in small increments. I don't do any stock moves. I don't do any big moves. I do everything small. So I probably will sell 5% of a position every week or every other week. I only do small increments. And, the main reason for that is because it gives him something to do, right? If you have read the Intelligent Investor book, you know that it's all about tweaking the portfolio is a way to actually not make major mistakes and always give you something to do. And stocks are kind of they're definitely my passion. So to me, it's not a downside to do a little trade every day. On the contrary, it's enjoyable. So I'm slowly averaging out of the stock. And I think the sales that I made prior to the earnings call were wonderful sales. Now that you see that the stock is down 28%. But I'm stopping my selling right now because obviously we are yet in a scenario where we have an overreaction. This is an overreaction of 26% down. I'm pretty, it feels to me like it's going to be an overreaction. I may be wrong. But, the question that I have is how much longer will this overhang last, right? This overhang may be I don't like that word, but what some people call dead money, because DLO is Muddy Waters is known to be relentless. Muddy Waters is known for repeated short reports after short report after short report, and it can last years. So do you want the stock to stay flat for years? Well, you could invest in stocks that are not under attack right now. Just take the loss, take the tax reduction, and move on. That's kind of my train of thought. Another point that I'd like to make is this company thrives by partnering with very, very large companies. Right? And I don't think that makes them look good when they negotiate with major companies when there is a short report and really the head of a short company on CNBC bashing you for 15 minutes, telling you that you're a fraud, which is what has happened, right? If you're a major corporation, that does not instill confidence. This is a classic example of yet another stock that had a great growth story, a great management team that is getting attacked and whose thesis, in my opinion, is getting killed because of that short report. Short reports, it's all about the doubt. Like if you put just an ounce of doubt, just a little bit of doubt, right, that can create overhang on a stock for years. And so this is just too bad, but let guidance be the judge. And was I right or wrong, right, to decide to sell? Well, when I look at the guidance, it's actually pretty good. They guided 640 million. So you know that I think a lot of companies are sandbagging right now. So in my videos, I typically take the higher end because that's just my assumption right now in this market. So taking the higher end of their guidance, assuming they're giving conservative guidance, that would be 50% revenue growth for 2023 compared to 2022. This is really good. This is really, really good. And if you look at my valuation spreadsheet, when I update it, this company is less valued than Square. I put it as Square. Square as Cash App is a payment system, and they have also the Square payment terminal, which DLO is kind of in this category, but slightly different because it's emerging markets, etc. But when I compare, for example, DLO to Square, it's cheaper. But when I see DLO to StoneCo, and StoneCo is one of my favorite fintech in the payment space. As you know, like right now, I have to make this equivalency, and I'm like, okay, well, for any share I own in Dlocal, which has the overhang of a short seller, I could just invest in StoneCo, which has essentially been flat and hasn't moved in like a year and 2 months. And one day the market will wake up, and when the market wakes up to innovation and growth, one of the wonders is, will DLO still be under attack by muddy waters when the market wakes up, right? So right now I'm stopping my sales because in my experience, after a big drop, wait 2 or 3 weeks, the stock will bounce back from that big drop. Maybe not back to the high levels that it was right before the drop, but it will bounce back a little bit. And I'm stopping my sales from now, but I'll resume my sales as soon as the stock bounce back, and I'll probably be fully out of the stock within a month or two. But the reason why I resume my sales is because I just don't trust that short seller. Because when you look at that short seller, it's not uncommon for them to sextuple, even septuple sometimes their attack over many years, and you can see their history on their attacks. They double down. When they have it, when they go after a company, they double, they triple down, and they even septuple down, right? 7 short reports almost in a row for one of the companies that they attacked recently. So, if this begs the question in 2024, when we have QE again and when the growth resumes, which I really believe will happen, right? That's the whole thesis behind this channel. You got to ask yourself, is this company still going to be under the overhang? And are we still going to get another short report from Muddy Waters as that stock is getting ready to get back with its normal valuation? Undervalued stock, in my view, but the valuation is low for a reason. And I think it's a short seller, and it's too bad, because I had invested quite a bit of time studying that company, and I thought they had a very interesting business model, and I thought they were a very promising company, but it's just the nature of the stock market game. That's too bad. That's too bad. I hate short sellers. What can I say? I really don't like short sellers. This is not investment advice. This is just entertainment. Hope you liked it. Thank you for your likes and for your subscribes. Have a wonderful day.